Good morning, everyone. Welcome to the live show. It's good to have you back. Haha, here we are. Assumption is the mother of all evil. Let's keep it simple today. That's the title today. Keep it simple. Trading with Rob. So today's trade of the day was the Great British Pound US dollar short. It does look a little bit long at the moment, but it will go short. How are you guys doing? Hope you're all well. Don't forget to let me know in the chats and tell me how you're all doing and how you're all feeling today, man. Are you ready for the show? I am going out quite early today. I've got a lot to do, so I don't really need to go much past 11. But yeah, okay, we'll be here for about an hour, hour and a half. That's great. No problem there. So, executing trades on lower time frames was a question that we had. And trade euphoria. Yeah, the market will always lull you into a false sense of security. Lots of questions. Got a comment called clickbait today. I had a good laugh. Oh, man, I really chuckled. I thought that was hilarious. What a day. That was so funny. Morning, everyone. Hello, hello. Yes, how's it? Welcome. Good to see you here. Okay, so let's go through the trades quickly. No, let's go through the news, eh? What's happening on the news? Trump pledges 25% tariffs on Canada and Mexico, 35% on China. That sounds great, just wonderful. Gold falls as Trump tariff threat aids dollar. Wall Street issues its most bullish S&P outlook yet. Yeah, Dow jumps, hits record after Trump picks Besant for secretary. CEO fires 90% of staff for missing a morning meeting. Hope you guys didn't miss your morning meeting, otherwise you got fired. Yeah, okay. Musk has big return to office plans for federal employees. Okay, all right, that's the news. Not much going on there. Let's have a look at the trades. Right, so what happened? Gold trade is going okay. We've got a gold trade. I did move the stop loss up. Doesn't look too bad. That's actually on the funded trader account as well, the gold trade. The gold trade is there. It's doing okay. These other trades, I was experimenting with something, so don't worry too much about them, but it's a Germany 30 and the US 500. So I actually took a short in the US 500, very tiny little thing. I was just playing around and testing something. And I also did it on the DAX. I took half a trade on the DAX just to see what would happen for fun. And we actually did take profit on the first trade. And then we sort of took another trade and it went into a loss. I was just playing around there. Don't worry about it. Nothing serious. There isn't anything to... I don't want to confuse you guys with my little experiments. So let's leave that out of the day. Okay. Morning, Matthew. Welcome. Okay, so the NASDAQ, still doing well, but just retracing slightly. Dow Jones was flying to the moon and still is. We'll see what happens this afternoon, though. France 40, a little bit short, but in the support, looks like it wants to go long again. The Nikkei was the interesting one because it broke through its trend support, started to go down, came back up to retest, and is now going down again. Is it going to continue on short? Looks like it will. SA40 is sort of come into this demand area, gone up, and it's come back again, and it's hitting trend support. Will it break through the trend support or stay in trend? Let's see what happens there. NVIDIA's come back quite a lot. And you know, I didn't add to my NVIDIA yet, and I am planning to do so this week. I think this is going to be nice. At this price, I think I've got to add to my NVIDIA as an investment. That looks great. Gold is doing really well. We called it short. I think it was trade of the day yesterday. And it's done pretty well. So I just want to see if it'll break through here and head down to the targets. And then we can move the stop loss right down behind it. That looks decent. I did think Brent was maybe going to go long when it broke through this trend resistance, but it's come back in force and broken through there. Morning, Roy. Welcome, man. Welcome back. The Dixie's still going up. It's above the what is now support, was resistance, so still looks long, which means the euro US dollar does look short, and as today's trade of the day is Great British Pound US dollar. I'm just waiting for it to give us a bit of a red signal. It's still on the green there. US dollar Japanese yen is turning short. It's broken through its trend support, so do be careful on longs here. It looks like it wants to go short, go the other way. Euro Japanese yen is still in its bearish trend and going short. South African Rand, US dollar, it's still long. It looks like the South African Rand is losing strength. So it may go all the way back up to the 1850. This would be a good long trade for anyone who wants it. The US dollar CAD, I was long, and while I was sleeping, it took me out. So there you go. I would normally have moved the stop loss all the way up behind it or added to the trade. That's what I was planning to do. I was actually experimenting with this trade as well, like I was doing with the others. And this little experiment I had on the go where I'd go in light and just add and add and add as I went along. But this one just shot up and took me out while I was sleeping, so we took profit. That's fine. So be it. Not much profit, but profit. Okay. The Aussie dollar, US dollar is still short, guys. It's still in the bearish trend. It's still going down. Somebody asked me about a currency pair during the week, and I looked back on the comments, and for the life of me, I can't find the comment, and I can't remember which currency pair it was. So if you do happen to come on this live show, please remind me of which one it is, and I shall try and add it to my list for you so that we've got it on a regular basis. Bitcoin has, as I said, it shot up. We got the profit. It carried on going. We didn't get back into the trade. It got so close to 100,000, guys. Look at this. Wow, got so close. And then everybody decided, oh, I'm getting out of here. I'm taking my profit, and off it went. So it's come down quite a lot. And also the comments that have affected gold have obviously affected Bitcoin as well. And as I said, it has come back down into this level of demand, and it looks like it wants to take this money and go up. But I would be cautious here. I actually would wait for it to come down and take the big money down here. And I actually was waiting for it to come back down to the 82, 81 level for a nice long trade. Could come down to the 88, 87 level and take the trade up there. I do think it might be a bit early to grab it now. I think I'll wait a little bit and just see if it gets a little bit further down. We might have better opportunities further down here. Sustainable Sprouts. It's Aussie dollar, Canadian dollar. Good morning. Well, it might have been. Yeah. Hello from the USA, California. How's it? Aussie dollar CAD. I don't remember it, but there might have been another one as well. But if it was Aussie dollar CAD, I'll certainly live with that. Aussie dollar CAD. I'll write that down, and I'll try and add it into my daily thing. I'm just going to write that down. AUD CAD. So I look back on the comments, I'll never find it. Aussie dollar CAD. I'll add it in for you. All right, and then we'll have that on a daily basis as well. Sorry, man, because sometimes I just get overwhelmed with so many different things going on, and then I miss these things. Okay, Aussie dollar CAD most certainly looks like it's in a bearish trend, dude. So, so I would stay short on that as well. It looks pretty much like it's staying short. It's not going long at the moment. We can have a look on the daily chart just for a quick look. See. Well, that's always an interesting one when the trends are against each other. Now, if I look at the daily chart, it looks more bullish, doesn't it? Hey, wow, look at that. That looks like it's in a bullish trend, and on the 4-hour, it's in a bearish trend. So trends are working against each other. If this is the only instrument you trade, well, I don't know. Maybe look for some others as well, because it's a little bit tricky when you're trading trends against each other on different time frames, because you just don't know what you're getting. But okay, it's bullish in long over the long run. So just looking at this, definitely a bullish trend there. So yeah, and actually, yeah, you could actually go long from here. So on a daily, this is a nice long trade. So wow, okay, Sustainable Sprouts, it's long. Okay. And if we go to the 4-hour, let's go and see what it looks like there. That's why I always go to the daily, because you don't get the clearer picture from the lower time frames. The lower time frames are not as reliable as the higher time frames. In fact, at the beginning of the week, if you can, go to the weekly chart and have a look at what the weekly chart's doing, so you get a picture of what's happening for the week. So for example, if we went to the weekly chart on the Aussie dollar, Canadian dollar, what do we see? It's actually, once again, it's actually slowly but surely giving us lower lows on the week. So be careful. there could be another lower low. So the weekly chart's a bit bearish. And that's the overall picture. On the daily chart, she's bullish, but on the weekly chart, lower lows all the way down here. So that looks a little bit weak on the weekly chart. So overall, your Aussie dollar, Canadian dollar looks a bit weak. It looks a bit bearish overall. But on the daily chart, you're probably going to get a long run up to this high of 94.67. Doesn't look like it's going to go to the moon. You might get a lower low here again on the weekly chart. But you did have a strong... No, it was a red candle last week, so you could... but it is in trend. So on the weekly chart, bit bearish, but still looks like it could go bullish on the daily. So on the 4 hour, let's just see what we've got on the 4 hour for you. Just doing a quick look here. If I was going to trade this. Are we on the 4 hour? If you look at the 4 hour over a longer period of time, it is bullish. So yeah, long trade. Okay, so it's a long trade on the Aussie dollar CAD. All right, you can take a long trade. I'll give you that one. You can take a long trade on it. That looks good. Okay. Looks like it'll want to go long, and there's your trend resistance all the way up there, so it's not too bad. Okay. Yeah, I wish I was a professor. That would be good. I could have prof in front of my name instead of Mr. I just love these people who get the title doctor and they're not actually a doctor. I always wondered about how people get the title doctor and then you go to them and say, oh, I've got a wee problem with my appendix. Oh, no, I'm not really a doctor. I got this for nothing because I was the president of a country and they gave me this doctorate. Yeah, you didn't earn it. You're just the president of a country. Anyway, that's something else to be discussed. I guess that's not something I should be discussing on the trading channel. I just love it when people get titles for nothing. Yeah. Okay. Yeah. Right. So, yeah, I should call myself professor. What the hell? Give me an honorary professorship. What the hell? Everybody else gets them. How's it, Jed? Morning. Welcome. Long time, yeah. No. Yeah, Aussie dollar CAD doesn't look exactly the same as US dollar CAD or US dollar CAD. Yeah, okay, sorry, US dollar CAD, not. Yeah, no. If I look at my US dollar CAD, there's your Aussie dollar CAD, right, going down and slightly up. But you know, you've got this slight uptick, but look at this coming down here, bit bearish. Bit of a correction there. Let's go to the US dollar CAD and look at this. It's gone straight up, all the way up. Tiny bit comebacks to take this demand level and off she goes. We actually took the long trade here and made the money. That I would never have taken the long trade on the other one. So no, not exactly the same. No. Jed, you've lost your last 11 trades. You are the world's unluckiest man. As I always say in my videos, that's gargantuanly almost impossible to lose your last 11 trades or to lose 10 trades in a row. But do understand that this is something that can happen. And it can be psychologically damaging when that happens to you because you start believing that the world is against you and you really just need one good trade to pull you out of that. You just need one good trade to get you out of that lull. But okay, here's the question, Jed. To understand why you lost the last 11 trades, maybe you should have had a journal if you're in that scenario. But if you didn't, just think about this. Were your stop losses too close? Were your target levels too ambitious? What caused you to lose the last 11 trades? Because what I can promise you, Jed, is the squiggly lines didn't cause you to lose the last 11 trades. Something else went wrong. Now, what I normally do if I lose 3 trades in a row, is particularly in a day, I'll walk away until the next day and come back refreshed and think about what happened. Why did I lose those trades? What went wrong? Why did it go wrong? What happened? What caused it to do that? And just get a clearer picture of it, because and don't picture it, don't put it all down to the squiggly lines. That's meaningless. Okay, that's just a high probability trade. You don't, you can take any trade on earth. It doesn't really matter. You just got to figure out why are the trades, why is it going against you? What's going wrong with your approach? Because it happens, and it's happened to me before. You get into this rut, and it just, it takes you out one after the other, and it can be quite painful. Yes, I am likely to go back in Matthew to go back into the US dollar CAD. I am definitely likely to go back into the US dollar CAD. This is going to sort of relax a bit and probably go up again, but I would most likely, I'd get back in if it gets down to this. You see the little red dot here at the bottom, 139.88, sort of the 140 level. I'll look at getting back into the trade here around these levels here, and then I'll consider it. Up here, no. Up here, it's taken me out. I've accepted the profit. I'm walking away, kind of smiling, but if it comes down into these levels here, then I might look again at another trade there, see if I can get back in. Okay. Gold, it's really done pretty well. Gonna move that down a bit. There's a bit more profit there. Let's do it on the funded trader account as well. 2650, eh? Boom, 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 boom. Yeah. Let's make that 2650. Just move the stop loss around a bit. If the gold decides to go back, then so be it. That's the funded trader account. Like I say, these 2 hours playing around with and experimenting on, and we'll see what happens to them. I'm not too worried about that. Okay, so DAX is going the other way again. That's fine. No problem with that. I say top 40. Yeah, okay, she's dropped a bit. Okay. Yeah, that's the thing, Judge. You see, you've had a great week the previous week. Has that somehow affected the following week? Just think about it. Just sit on it. But like I say, if you do lose more than 2 or 3 trades in a day, walk away, sit in your hands, come back tomorrow. Just think about it. Think about what's going wrong, and how have you approached it and whatnot. And it kind of helps. The squiggly lines don't make much difference. It's about, because this is just high probability, but at the end of the day, something's gone wrong in the approach that's changed it. I'm holding with a trailing stop on US dollar CAD. Perfect. Nothing wrong with that. If that's working for you, keep it going. That's how I normally go for it. The only reason I'm out of the US dollar CAD is because I was asleep. Otherwise, I would have moved the stop loss up, added to the trade, whatever the case. It's just that when I woke up, it had taken the profit. So that's okay. That's why you put the profit targets in place. It's not a big deal, so be it. So be it. That's how it works, guys. That's how it works. Somebody asked me about effecting trades on lower time frames, and if the person is here, they must just mention, and then I'll get into it. But what I will mention to you guys is effecting trades on lower time frames is extremely high risk. You're already in a high risk game. You're already in a game where 60 to 80% of traders lose money. And now you take it lower and lower and lower and lower, and you push the risk more and more and more and more, and you get down to the 5-minute time frames where 99% of traders lose money. And the reason for that is simple. The lower you go with the time frames, the more unreliable your high probability becomes. And the more tricky it is to approach the trades with the right psychology. This is actually a big problem that I see people facing is when you get into the trades, you you've got more pressure because things are moving that much faster. And I think that affects the psychology that much more. You know, when you're looking at a candle and it's shooting in one direction and then in the other direction, confusion is something that happens to human beings no matter how intelligent they are. You know how quickly you can become confused by things, doing things that are abnormal that you wouldn't normally expect. Because when you look at a chart like this, for example, you expect, oh, I'm expecting that this will go, hit this, give you a green candle, go the other way. And at this pace, you look at it and it makes sense. But if it starts doing something at a speed and untoward, and it gives you a long red one and then a long green one, and suddenly your brain just, it doesn't compute so well and it gets confused. That's why people lose on the lower time frames, because they start chasing it and because you believe you're right. You're always going to believe you're right. You're never going to believe you're wrong. And that's where it goes wrong. At the end of the day, you start chasing these things and it starts going against you. If you have a really strong mindset and you've been doing it for a long time. Now, I know of one or two traders like that, not going to mention names. Some of them, I look up to them as mentors almost. And they trade on these time frames, but you can see they're switched off from the emotions completely. It's just so straightforward. The emotions do show through sometimes, but you can see that the way they trade, there's a black and white picture there. That's it. It's got to be like that, and that's it. But even they take losses and they accept it, you know. Yeah, you know, as you put it here, on the lower time frames, you respond instead of planning. You know, you go into the trades on the lower time frames planning. But when you get there, all the plans go out the window. I don't know if you'll agree with me on that. All your plans go out the window, and then you start responding and chasing and putting out fires. And and all it takes is for you to lose the first 3 trades on a 5-minute chart. Boy, oh boy, do you start going into a different frenzy then. Sorry, guys, just finishing my coffee before it gets cold. Ooh, it's already cold. Yeah. So watch out for these lower time frames. But for the guy who asked me, how do you sort of set up the lower time frames? How do you trade the lower time frames? Exactly the same way you trade the 4-hour, exactly the same way you trade a weekly chart. All you got to do is go to the higher time frame, preferably the closest one to it that you're trading on. Well, not the closest one. If you're trading on a 5-minute, I'd probably go to a 30 minutes or an hour to get these levels, and then go back and then get the levels on the 5-minute and work from there. Like we trade on the 4-hour, so it's safe to go to the day chart and get your levels from there. In fact, you can use the day levels for the hour chart as well. But you know, if you're trading on the 15-minute or the 30-minute, you might want to take your levels from the 4-hour just a little bit closer. But just remember that the levels that you're taking are not as reliable as the levels that you're getting on the day chart. But the trouble with the day chart is those levels are so far out. If you're trading on a 5-minute, there's just no point. So, yeah, what you can get from the 5-minute charts, it's mostly scalpers. And the scalpers all show you how they're winning all the time, because they are. If you're a scalper, you're going to do exactly the opposite to Jed. You're going to win 11 trades in a row. But they're going to be small profits. In other words, if you take a trade here and you say, I'm going to go long on this SA top 40, and my stop loss is going to be at 75,000, and my take profit's going to be at 79,000. So now what you're going to do is you're going to wait for this trade to play out all the way to the 79,000. And let's say you take 10 of these trades. In all likelihood, 5 of them won't win because they're not all going to reach their full target. But when you're trading on those small time frames and you're scalping, you're never going to trade to the full target. You're never going to trade to that 79,000. That's why you win 10 trades in a row. What happens with scalpers is that they go just straight into profit and they get out. Straight into profit, they get out. So they would effectively get in at 76,000 and get out at 76,010. It's absolutely insane. And then you take 11 trades with a win like that, and then you take that one trade with a loss, and the loss will be huge. And it'll take out all those trades that you won, and you'll just sit with a loss. It's how you approach it. Remember what I always say. It's that planning of approaching a trade with a view to winning the trade. Now, there's nothing wrong with you getting out early in a trade like this. If you see you're at 78,000 and the target's at 79, but you see at 78,000, this trade's had it. It's done. It's run its course. And you've only won 1-1, but it doesn't matter. Then you've won. You can take that profit. That's not scalping, guys. That's just common sense. You're taking a profit on common sense. There's nothing wrong with those. Where it goes wrong is when you get into a profit and you're just here and it's still a good trade and you just jump out for no reason at all. There's no point in that. It's like me selling gold at right now. If me saying, gold's $729 in profit, close the position. No, it is in a precarious position. I agree with that. But I'd rather follow it. I'd rather follow it and see if it can reach my target. Because, when I took the trade, I had a reason for putting that target there. I might not remember what it is now because I've done other trades, but I had a reason for putting that target there. So I'm going to leave the target there. And then I'm going to trail the stop loss down to it. And then hopefully it'll go even further. Because I think if I remember correctly, I was maybe hoping for it to go to 25. So, you've got to think of these things. When you see all these scalpers making their money, they would have traded out of this trade long ago already and be on to their next trade. And believe me, some of these guys do make good money. It's just that when they go into a loss, there's no plan. And that's where the problem starts, okay? You've got to have a plan for your loss. You've got to say, I'm prepared to take the loss at that level. And that's it. And at the moment, dollar cost averaging is all the rave. I don't know how that's going to work on a 5-minute time frame. I guess it should be quite interesting to see. I don't know if anyone's actually doing it on a 5-minute time frame or not, but it could be interesting to see. I don't know what you guys think of that. So, in the news today, effectively gold falls as Trump tariff threat aids dollar. Okay, so Trump's changing things already and he's not even in the office yet, but the portfolios are doing good. And I'm telling you now, my portfolios are going to do absolutely stunning now, because I remember when he was in office last time, how well the portfolios did. But I got to tell you guys, someone commented that his tweets are affecting their trading. And I know he does this tweeting thing. Yeah, I've heard of that, but don't blame that for your trades. It's not the tweets that are causing your trade to go down. What caused your problem the other day was not his tweets. It was an actual war going on. There was an actual problem in the world which caused the market to spin out of control, not his tweets. Believe me, his tweets are not affecting your market. If they are, then I have to say that your stop loss is far too close, and or something's wrong with your plan, okay? Or you're trading on a 5-minute chart. But other than that, no, I don't think that his crazy tweets should affect your market in that way, in such a way that you're going to be taking out of trades every time. That shouldn't be happening. Then you've got to have a look at your plan, where your stop loss is and that sort of thing, and or what time frame you're trading on. Because if you're trading on 5-minute, 1 minute, something like that, yeah, it probably will affect you. But how many people are actually listening to those tweets anyway as well? In the old days, yeah, but not anymore, I don't think. And people look at it and go, that's just him. Really, I don't think that's going to affect your trading. It shouldn't be. and you should be able to work around it. Super BRG. Hi, Rob. How's it? Welcome. Good to have you on board. Glad to see you are here. So as I say, that's where your lower time frames are also going to kind of affect you as well, is when you have this scenario of outer things on the outside, geopolitics, things like that, moving around, they're going to affect your trading on a much bigger basis than if you're on a lower or higher time frame, trading a bit slower. And if you keep your stops in a good invalidation area, 9 times out of 10, you'll be okay. You know, I put this take profit on the US dollar CAD probably in the perfect spot. But I would have liked to have stayed in the trade and gone for a bit longer. It's just, you know, if you're asleep, that's what happens. But if that had been a stop loss, I would have had the opposite reaction. I would have been upset, you know, because that's a big move. That's a spiky move. And that can affect you even on the 4 hour. So yeah, these things happen, but that wasn't a tweet by Donald Trump, for example. That's just news in the market. That's just things that are happening in the general market on a day-to-day basis every day. As I said in the beginning, guys, just be very careful of this DAX. It's making lower lows constantly above this main support. Keeps trying to push through. There was 2 head and shoulders that are developed here, which are now negated. But that doesn't matter. It just keeps on giving these lower lows, keeps on pushing down here. And if it doesn't push to the upside, there's a very good chance that this DAX is going to crash down. So do be wary of that. My experiment on this with this light trade, and I don't want to confuse you guys, so don't copy me. Do your own thing. I'm experimenting with something here that I used to do in the old days, and that is getting in light and then just adding more and more and more to the trade as I go to get it up to a full trade. But don't go there, guys. I want to see how it works in today's market before I tell you guys how to do that. I normally, what I do is I go in with a full trade like I would have in the gold. Go in with a full trade, with a full stop loss, with a full everything, and just work the trade. Okay. I'm just playing the fool with this just to see what it does, that's all. Just experimenting with something. But I was trying to see if I can make it a bit easier for you guys, and on the funded trader markets as well. That was my main concern, was trying to make it work here. See if I could sort of make it a better way to trade in the funded trader market accounts and that sort of thing. Because as we know, we're experimenting with the funded trader market accounts for you guys that need funded trader market accounts. So, yeah, and I mean, it's not something I would normally trade with. I normally trade with my own accounts and whatnot, which I do. But this was just for you guys, just to see if we can get around this thing. So if you guys want one, I'm sure they're going to have some specials this week. Once again, 50% off on evaluations. They've got instant funding. Black Friday ends November 27th. There's a link in the description if you want this. It's not bad. You get trading view as the charts. It's okay, you know, and you can keep your trades over the weekend. And you can trade overnight. You can trade your own system. You can do your own thing. It's actually quite a nice little thing to have. So if you guys need something like that, it's available. Okay. What's your most rock solid commodity that you trade? You know, I get these questions all the time, and I'm going to answer it in a way that makes sense, okay, to everyone. And that is, my favorites change on a regular basis. Understand one thing about me is I've been trading for 30 years, okay? And for me to tell you that I've favorited gold since day one till now would be just a lie. It would be wrong. I have my favorites at certain periods of time because of the way that they're trading. So that changes from time to time. But when it comes to commodities, I have to say that gold and Brent would be my 2 favorites always, simply because they have liquidity. I look at my favorites because they have liquidity. The more liquidity they have, the more I like to trade them, okay? So why do I say that? Because with liquidity, the price moves, There's always a trade. You're not sitting with something that's standing still. That's why I rather trade gold than silver. I don't even know why I've got silver on the board. I've got silver on the board because I just wanted to see what it looked like, but it follows gold to the T and it's got less liquidity, so I don't bother with it. I rather trade on the gold side. So that might answer your question. At the moment, as we stand right now, gold's my favorite, and tomorrow it might not be. So don't hold me to it forever. You know, don't come back to me in 6 months and say, but Rob, you said gold was your favorite and you're not trading it anymore. Yeah, well, you know, things might change. So do be careful of that. For example, for a very long time, the DAX, the Germany was my favorite trade. I mean, I wouldn't even touch the US 500 DAX. It was DAX. And then I stopped trading it for a while, and I was trading mostly US 500 and FTSE. And then now the FTSE is no longer my favorite. Now I'm back on the DAX. And SA Top 40, for example, for a while was one of my favorites. Your favorites change from time to time. The overall favorite in the market on Forex is the Euro US dollar. Everybody loves the Euro US dollar. Me, I personally, these are all my favorites. So I don't mind too much. Platinum, I've traded platinum before, and it frustrated me. It was slow. It was very slow. You know, platinum's more like an investment. Now, be very careful of commodities in the sense that if you just want to trade commodities, good stuff. But commodities are what I call cyclical. Let me get that word out. Cyclical. Okay? Which means they go up and they go down and they go up and they go down. And if you look at them over the last 99 years, they've gone up and they've gone down, they've gone up and they've gone down, according to what the value of your dollar is or whatever the case. So they never actually get that gain or value, that gain in value that you get from an index, for example. It's a bit like currencies. They go up and they go down. They're cyclical. They don't just go up and they don't just go down. They work against each other and they stay in a kind of a range, a flat line, whatever. Okay? And commodities kind of do the same. They don't give you gain in value. So, for example, if you had invested in gold 99 years ago, you wouldn't be much better off than you were then. Whereas if you'd invested in a share or the US 500 index, S&P, you would have turned yourself from thousands into a millionaire. Okay? So you would have been that much better off had you invested in an index than had you invested in a commodity, because a commodity is cyclical. Now, platinum to me is more like an investment, and it's slow. And at the end of the day, it's cyclical. It's going to go up and it's going to go down. It's going to go up and it's going to go down. It's a bit like if you're investing in shares. If you invest in a bank, if you invest in a food chain like McDonald's or whatever, you're expecting a return in the future, because that's why we invest. We invest with forward earnings. We invest with what we expect in the future. That's why we invest in anything. If you invest in something that tangible that you can see, like a property, you invest in it with a view to making more money on it in the future. That's the reality of it. I'm trying to take the squiggly lines out of the game for you so that you get the concept, right? Now, you invest in a mine like Anglo American or BHP Billiton or something like that. Those are cyclical. Those will go up and down because the commodities that they mine go up and down. And unless that kind of a share actually gets into some other kind of business, it's always going to be like that. So those companies also, if you invest in them as shareholding, you find you might get good dividends from them, but you never really get that acceleration to the moon on price. You know, it stays with inflation and it stays in that cycle always. Just a little bit of information on the side. I've always got information on the side. Yeah. No, slow is good if you're investing. Slow is not good if you're trading. Slow is good if you're trading in relative sense. Okay, so in other words, if you're trading on the 4-hour charts and you're giving yourself time to trade on the 4-hour charts, but it's not slow. This is not really slow. It's actually working. The market's working. The prices are ticking. They're going up and down. You're able to trade on a daily basis. In fact, on a 4-hourly basis. That's not slow, really. Whereas if you're trading on 5 minutes, it's too fast and it's too quick to get any real information on the market as to what's happening, because all you're doing is reacting to the knee-jerk reaction that's happening in the market in the last 5 minutes. And there's a whole bunch of traders that go rushing in and then they go rushing out and they're buying and selling too fast. Whereas with 4 hours or day trading or 1 hour trading, you get this sort of, yeah, that looks like a good investment. I'll buy into that with a view that I'm going to make money at the end of the day, or I'm going to make money at the end of the week. That sort of trading. It's not really slow. It's just a more planned, more stable sort of way of getting your trades, because the entire market is thinking in a more sane way, not an insane way. So the entire market's deciding on a trade based on information that they've got out in the market and probabilities. And those traders are going in and saying, I'm taking a trade on the probability that I'm going to make money by the end of the week. That's a stable sort of trade. Whereas on the 5-minute situation, the traders are rushing in and they're rushing out, rushing in, rushing out. And you're never really getting a clear picture of what's good and what's bad, what's going to go for you, what's going to go against you. Really tricky to do that, which is why most people who trade those time frames are what they call scalpers. They get in and get out as quickly as possible. It's scalping. It's in, out, They're not holding trades for any long period of time because they can't, because you really don't know which way the market's going. It's a full-on go to the roulette table and choose red or black. You really, to pick a system that's going to make a huge difference to you on 5-minute or 1-minute trades it's insane, to be honest with you. You're not going to get a system that's going to work. Would you trade ranges for cyclical markets, tops and bottoms? Yes, I see a lot of better people on the 4-hour. Most people will, look, don't get me wrong, I've traded 5 minutes, I've traded 1 minute. I did it. I made the same mistakes everyone else does. And I broke even. Luckily, I didn't bankrupt myself from it, but you can. And, somewhere down the line, you're going to see the light. And most of your older traders or traders that know what they're doing will end up on the day or the 4-hour or the 1-hour charts and realize that you need a more stable scenario for trading. But there are 1 or 2 extremely good traders. Don't get me wrong, guys. There are 1 or 2 extremely fantastic traders on the 5 minutes that know what they're doing. But 1 or 2, that's the problem. And you can't copy someone else's trading as well. It's like I'll say to you, don't just copy my trades, because if I have a bad week, you have a bad week. It's that everybody has bad moments. So do yourself a favor and take all the information you can from me and from everyone else if you can, and learn how to build a system around yourself, learn how to trade yourself and pick up the systems, because that's important. You can't clone another trader because it's all in the psychology. And that's a big problem, is a lot of people get into the market and they follow these guys that are showing you Lamborghinis and Ferraris and whatnot. And like I say, I've got nothing against any of the other traders. They've all got something to give. And you can learn so much from everyone because everybody's got something to give, some information. But the trouble is you try and clone someone and you try and copy that out to the T. And unfortunately, when it gets down to it, your psychology is different and you can't do the same thing exactly. And you know, you can put two traders in the same room with exactly the same knowledge and exactly the same style, but at the end of the day, one will win and one will lose simply based on the approach, which is why I said to Jed earlier when he said he had a bad week, just sit down and think about what's changed in your approach and what's gone wrong with your approach. What have you done differently? There must be something in the approach that's causing the problem. It's not the squiggly lines. It's something with the approach that's causing the problem. Okay. I've thought about scalping because I don't have much cash to start with. Whew. Well, you won't have any cash if you scalp in the long run. There's lots of scalpers out there. You know, the trouble is you watch these videos with the scalpers and it looks great. And you think, oh, I could make so much money doing this. Yeah, check this out. He makes money every time he trades, man. Sure, it's unbelievable. They don't show you that loss, that big one. They don't show you that big loss, eh? Be aware. They'll show you all the wins. And like I said to you, I'll make 10 wins in a row with scalping. We can sit here and we can do the experiment. We can do trade after trade after trade and we'll win on every scalp. Because it's a scalp. You get in, it goes into profit, you take the money. Get in, take the profit, goes the money. And when it goes into a loss, it's going to clean up all those wins. And that's what they don't show you. So just watch out for scalping. It looks fun. It looks great. If you don't have the psychology for it, and you don't have the ability for it, don't do it. Don't do it. You will lose all your money. Matthew says he's seeing Euro US dollar sitting on support just now on the day chart. Could you take a look, please? I agree with you, Matthew. It is sitting on support totally on the day chart. Absolutely, it's sitting on support. I know that. Look at this in your range. Okay. So, yeah, you're perfectly in a good spot there, right? So, I agree. And also what you can look at, if you look left here, Matthew, you see this, the size of this down run over here almost matches this one. So if you're looking at probability and you're thinking it's going to do the same as it did before, then you're thinking, double bottom, it'll go back up here. But that's not necessarily the case, which is why I'm not really invested into shorting this just at the moment. But there is one thing that I am looking at, Matthew, that is concerning me with the Euro US dollar. And that is I always look at the human beings behind it. And the whispers in the market are traders are looking to get Euro US dollar down to parity, back down to 1-to-1 like it was before. And, you know, when that starts pushing, these institutions start pushing, people start pushing, and, you know, you just don't know. There's a very, very good chance. So, look, I always believe in trading what you see. So while there is a bit of a support, let's see if it breaks below it. And if it breaks below it and it carries on short, then you're looking at a decent short trade. But the other thing I'm looking at around the Euro US dollar being in this bearish phase, okay, and don't counter trade it based on the fact that it's in support, because it hasn't broken trend, it's still in trend. You only counter trade if it breaks the structure, if it breaks the trend, right? Don't forget that. So we're not going to counter trade it because it hasn't broken the structure yet. Now, then go and have a look at the Dixie, like I always tell you. And that is your dollar, right? Look where that is. Okay, it's still going up. It's still above its support, and it wants to continue on up. It's faltering. It's sitting around here, but it hasn't faltered and it hasn't broken to the downside. Great British Pound US dollar, which normally follows in a very similar vein to the Euro US dollar, has broken through the support, and it looks like it's starting to turn short. Okay, so it's been short all along, broken through, come back, retested, probably continue on. Over here as well, if you go to the daily chart, what are we going to see? We're going to see the same bottoms, but what you're also going to see is there's a trend support here as well that it's got to break through. But in all likelihood, and also same as the euro, you've got the same length of move. But in all likelihood, see here on the day chart, it's showing you a nice big red candle on the day chart. It looks like it wants to go down. This is today, so don't worry too much about that tail. It's still a valid candle, so don't get excited about that. The candle from the day before is very sort of undecided. It's not quite sure, but these are red candles on the day chart, and they're also coming out of a major level, coming out of a kind of support level here. So it looks short as well. It looks like it wants to go short. Go to the weekly chart on the Great British Pound US dollar. Ouch. Look at that big red candle the week before. Then last week, we got this one on the weekly chart. Okay, this red candle, long tail at the top, short tail at the bottom. There's a lot of sellers came into the market here. A lot of sellers came into the market here. Big red candle. Looks like a red week. This finishes like a red week again. Just got to have a look and see where we are, but this is not stopping. It's falling quite hard. And the next level is down here at the 123, which is why I called it today on the 4-hour short to 123 down here. Measured move. Where are we? Called it down to the 123. Measured move down to here. So yeah, so I've had a look at the euro US dollar, and that's what I'm looking at. End of day. Okay. Right. Hello, Rob. I'm a new member to your channel. Enjoy learning from you. How's it, Wendy? Welcome. Welcome to the community. And everyone here is here to help you. It's a great community. Everyone here is fantastic, and we've all got great ideas. And most of the people here actually are sane and know what they're doing. Says more. Hi, Rob. You said a lot of times that you trade since 30 years. However, you strictly get paid by trading since then. Okay. A lot of people ask me that question. Did I only trade for 30 years? How's it, Sophia? Welcome again. Good to see you again. Obviously not. I've had businesses in between. I've had other things going on and what have you. Trading has always been my passion. And there's been a number of years in between where all I did was trade. And then there's been years in between where I got bored and I started businesses. And some of them successful, some of them not. But yeah, and some great businesses, to be quite honest with you. And yeah, it's been fun. But I've always gone back to my trading, and I've always done my trading at the same time. And but yeah, to say I just lived on trading, no, that would be a lie. I did other things as well, but I do it for fun. And it's because you're kind of a lonely trading. You have to understand that if you're a trader, it's a very, very, very lonely business. So you end up looking for other things to do. For example, now I've got a YouTube channel. I never thought it would do this, but you know, it actually was. I was kind of bored, so I'll make a video and I'll talk to the people about whatever. Okay. And you do this, and then you end up with a situation like we've got now, which is great. I love it to bits, and I'm enjoying it, and I'm probably enjoying it as much as trading, to be honest with you. But yeah, in between, I've done a few other things. I've had businesses on the go and stuff like that. I haven't worked for a boss since I was 27 years old. That's a long time, guys. That's a really long time. And even before that, when I was still working for a company, I actually was trading already. I'd done my course, my little thing on the side, and I'd learned to trade, and I was phoning the broker every day and whatnot. But in those days, while I was working, I didn't have to sit and look at charts. We didn't even have computers. So I just used to phone the broker from my office phone. Yeah, no, totally. It was fine. So yeah, I've done other things in between, obviously. So before I even left work, I was trading, and then through life, I mean, I had a few businesses, and at one stage recently, I was going to start a property company, so I tried to get a property license, and then I found out that everybody in that industry is, wow, they're stealing from the trust accounts and goodness knows what else, and I decided to not do that. I decided to walk away from that one. That was that was a terrible business, let me tell you. No, sorry, but that one's not good. But yeah, I've done lots of different things in my life. I've owned motor parts shops, I've owned computer shops, yeah, all kinds of things. I'm quite the entrepreneur, to be honest with you. Quite the entrepreneur. Sophia, Great British Pound JPY has been diving. Probably the same as the Euro JPY. Sophia, the Euro JPY is also diving. Remember, we were short on it at one time. We got out, but it's carried on diving. So I'm pretty sure the Great British Pound JPY is the same. The reason I don't have it on my watch list is because I've got the Euro JPY. Yep, Great British Pound JPY looks exactly the same as the Euro JPY, so not much different there. That's doing the same thing. Yeah, okay, Sisman, thank you. You're all the best. Stay with us, Sisman. Don't go away. Enjoy. Hello, Bob. What's your advice to a person who used to be a profitable, but after a massive loss within a day, and now being afraid to execute new trades? Maduri 96. Sophia, yes, you called it last week. Yeah, sure did. Okay, so that, this is, as I always tell you guys, I don't give advice. I certainly don't give financial advice. I'm here to help you, and I'm here to show you what I do and the information that I've got that hopefully I can impart onto you guys from my experience over years and years and years, and help you get through these difficulties and help you, hopefully, you can become a good trader. Look, I see your question, and what I see is a very psychological thing, and that is you took a big loss in a day. And the main reason that happened is because you didn't manage your risk. So, my advice to you is to follow my method of trading, which is what I always tell you guys in the video, which is the risk management and the psychology of approaching trading. So firstly, what you've got to do is you've got to forget about these squiggly lines as being the most important thing in your life. These squiggly lines are effectively a high probability trade. They're a high probability trade. You're taking a trade based on what happened in the past with a probability of what's going to happen in the future. As I said earlier, if you want to invest in something with the hope of making a profit from it, whether it be a trade, whether it be a business, whether it be a property investment, whatever it might be, your sole intention is to make a profit in the future. And you want a high probability of investment. So when you take that investment, you want to ensure that there's a good probability of making more money. But when you take that investment, you should always have some kind of escape plan. Plan B. What happens if this doesn't work out? What happens if I buy property in this area and the area starts to turn into a slum and the values start dropping? What should I do? Okay. Should I hold on and let the money roll down this toilet and rent it out? Or should I sell it and get out and take a small loss and walk away? Now, apply this simple life structure to your business and trading. And what I always tell traders, and go and watch my videos because I explain it in just about every of the most recent videos at least, how you approach the trades, okay? And it's simple risk management, and that is take your account size, whatever that account size is, whether it be on funded trading, whether it be on real money, it doesn't matter, okay? risk 1% of your account size. Now, I don't mean every time your account gets bigger, just keep making the trades bigger. What I mean is say to yourself, my account size is $100,000. I'm using it as a round figure. Please, a lot of guys tell me, but I've only got $5,000. But then 1% of 5,000. But I'm just going to use 100,000. So say your account size is $100,000. 1% of $100,000 is $1,000. So on every single trade that you take, you risk $1,000, right? If you lose 10 trades, you lose 10% of your account. So you can recover that. You should be able to at least. 1% on every single trade, no matter what. Unlike what happened to Jed last week, in all likelihood, you should win 5, lose 5 in high probability situation. You should not lose all 10 trades, but it does happen, as we heard today. Now, if you do lose all 10 trades, you've only lost 10% of your account, not your whole account. Now, manage the trades. In other words, if the trade goes into loss and takes out the $1,000, take the loss, move on to the next trade. Do not dollar cost average. Do not try and move the stop loss away from your loss. Because the amazing thing about human beings is when they go into loss, they hold on to the loss tightly and for as long as possible, I guess with the psychological hope that they're somehow going to come back into a profit. Forget it. That's not going to happen. It does happen sometimes, but most of the time it doesn't. It always ends in tears. It always ends in tears. What you've got to do is follow the wins. You don't have to add to the trades. I do advocate that if you can add to the trade, add to the trade. But if you don't want to make the trade bigger and you don't want to add to the trade, that's fine. The most tricky part for you, though, is when you go into a profit and you're $300 in profit, you're going to want to take that profit. And you mustn't do that. Your target's $2,000. You want to make $2,000 for the $1,000 you've paid for the trade. You're putting $1,000 at risk here. So you want to at least make $2,000 back. Now you're going to jump out at $300. No. Wait for it to get to $500, $600. Move your stop loss up to break even. Guess what? Your trade's free then. Even if it comes back and takes out your stop loss, you haven't lost that $600. What you've done is saved $1,000 and you haven't had to pay for the trade. Think of it that way. Switch your mind around. Now, when it goes into profit and it goes higher and higher, start moving that stop loss up behind the profit. For example, here, where's the gold trade? Good example here. We've taken the stop loss. The stop loss was at $1,000. We've moved it down to break even. And now we've moved it down to about $250 in profit. And the trade's $700 in profit. Okay? That way, if it comes back and takes it out, it hasn't cost me anything. In fact, it's going to make me $244, right? So why would I stress? But if it keeps on going, I'm going to make more money. And when it gets down to here, to the profit level, I'm going to move the profit away, just like you would normally move your stop loss away. I'm going to move the profit away and move the stop loss up closer. That's how we trade. So what would have happened to you in that particular day is you probably either didn't have a stop loss or you moved your stop loss away, and it would have been a gargantuan loss. And psychologically, it hurts you and destroys you. That's the problem with trading with squiggly lines and systems. Don't trade with squiggly lines and systems. Trade based on a understanding that this is just high probability and that you have to manage the risk on everything. You have to have a plan B for everything. Nobody takes a trade or buys an investment with the view to losing. Because if you do that, then there's something wrong with you. Anyone who buys into an investment, any kind of investment, if you join somebody else's company and you buy shares in it, or if you start your own company, or if you invest in property, or if you invest in shares, or if you just trade, you're always looking to make a profit. And like I say to people, they say to me, but Rob, you're trying to earn money off that and you're earning money off that. Yes, I'm a bloomin' trader by nature. So if I'm a trader, I'm a person who wants to make money off everything because that's what we do. We're traders. We our mindset is geared. I'm an entrepreneur. I'm geared to make money out of everything. I'm geared to looking to the future with a view to making a profit. That's how I'm geared. I'm not geared to making a loss. I'm not geared to just throwing it in the bin. I'm not geared that way. I'm geared as a trading type of person, and you are as well, because you're trading. So your plan is the same as mine. Your plan is to make money out of anything you can. Okay? Don't tell me it isn't, because then you're lying to yourself. Your plan is to make money from anything you can. And that's the whole point of the lesson at the end of the day, is understanding that you're gearing yourself to make a profit, but have a plan B just in case things don't go your way, just in case things don't work out as planned, and you need an escape route. If you were in the military and you were going into an operation, you wouldn't just go running in and expect nothing to go wrong. Every military operation that ever happens in the world, they've always got an escape plan. They've always got a plan B. They've always got a way out, right? I know this because I've been there. So just, guys, that's how life works. Always, always, always have some form of escape route, some form of way out. Manage the risk. If you manage the risk, you live, you survive. That's it. End of story. So I hope that helps you, Maduri. I mean, after being profitable and taking a massive loss within a day, that is just, what happened to you there as well. There's another thing that happened to you there, and I'll tell you what it is, and you might disagree with me, but I can tell you right now, overconfidence. Overconfidence is one of the worst things that can happen to you in the market, because you win, and you think nothing can touch me. I'm always winning. Guess what? The market lulls you into a false sense of security, whacks you in the back of the head. I could show you the best traders in the world. Actual pros that have got university degrees for trading, okay, for being in the market, struggling, taking losses. They'll be the first ones to tell you that you're going to take a loss from time to time. They'll be the first ones to tell you to expect the loss and to plan for the loss. Yeah. FTSE sell. Yes, I did say sell, eh? I did say sell, yeah. There you go, FTSE sell. I was thinking it would get to the resistance, but it didn't. I think this morning I did call it as a sell. I just want to check my trade of the day. I don't have it on this page, but I did have it here. FTSE, yes, I did call it as a sell. Totally. And it is a sell. If I look at it, it's a sell. Looks like a sell to me. I need to remove my kill streak. Hopefully that doesn't go wrong for you. Look, I've called the DAX as a sell as well, eh? Because in my opinion, it's just, look at this, guys. It's just making lower lows all the time. Just making lower lows, lower lows, lower lows, lower low, lows against this support. Keeps trying to break through. I just get the feeling this is going to go crash into the downside soon. I might be wrong. It's a 50-50, guys. Remember, Jet, the market's 50-50. But there you go. Just, I got a feeling this is going to go as well. So keep an eye on that as well. The FTSE, yeah, looks like a sell to me. Looks like you might get the sell here. Why not? But, your worst case, Jed, is if it put your stop loss up high. So work your risk so that your stop loss is up high. Okay. Just give yourself a bit of space because you've had a bit of a losing streak. Give yourself a bit of space. Put your stop loss up high and give yourself a bit of space in case this goes up into the support and comes down, okay? Because it is sitting in the middle here. Just in case it bounces back up, give yourself some space on the stop loss. Maduri, the absolute golden vice, Rob, I appreciate very much. Apologies for calling you Bob. It's okay. Many people call me Bob. It's all right. One of my best friends is a Bob. My dad was a Bob. The reason I call myself Rob is because my dad was a Bob. Right, okay. Blimey, I might get one right. Perfect. Cheers, okay. Good, good, good. Just give yourself space. I am a little bit concerned on the indexes for the Christmas rally, but what I'm looking at for the Christmas rally, and I'll use the US 500 as an example here, is it coming down into these levels here, and then Christmas rally straight back up again. So why have I got this trade open? Don't worry about it. I was playing the fool here as well. Don't worry about it. I'm going to add to it later. We'll sort it out. Anyway, DAX as well also needs to be repaired and sorted out. That trade needs to be sorted out as well. Yeah. Yeah. Okay. Funded trader markets. What's happening here? Mostly the gold trade that's doing well. The US 500 and the Germany 30 is not doing anything. I wanted to add to the Germany 30. Might still do that. But it's fine. Don't worry. Just leave it. It's okay. It's okay. Right. We know the funded trader markets are there. And I've left a link to those as well. For those of you that are doing investments in South Africa, I've also left a link to Easy Equities in the description as well. Excellent for investing, really cheap. You can invest anywhere in the world. So if you're in South Africa and you're looking for an investment account, they're really good. They're really good. And it's cheaper than doing it through the normal brokers and the banks. It's not bad, actually. And you can actually, I mean, their trading costs are next to nothing. And if you deposit every month and whatnot like you're supposed to, and you put it in your investments, they actually don't even charge you fees. It's incredible. It's actually quite good. So if you want one of those, just there is a link down in the description as well. I don't get anything for it, but it's there for the guys in South Africa that are looking for an investment account. Yes, I did mention the cup and handle and how it will look. I don't play much into patterns, but I did mention that the cup and handle was there, but I think it may have negated already. It's now more of a double top, okay? So not much worse than a cup and handle situation, but you get this round move like this. There she goes. And then you get the handle developing over here, which normally falls off. Okay, and then it falls off and off she goes, right? So that's your cup and handle. It's an upside down cup and handle, that one. If you were to turn it around, it would go the other way. It's a bit like looking at negatives, and it becomes difficult to see the upside down. There's your cup upside down, there's your handle developing, all right? And then it crashes off of that. But the cup and handle is sort of negated because it's got quite high. It normally is a little bit lower like here. But it's gotten up to here, and then you've got this double top that's developed now. So I would see that as a down. I'm also seeing this pennant move, which is also a sign that it's going to go down. So there's kind of a lot of little pictures here that are showing me that the US 500 wants to correct. So watch out for that. The cup, it's sort of upside down. There's like a whole cup here, handle, then it normally filters down. It's just a pattern that I see in the market. And don't play too much into the patterns because it can get confusing, but just sort of, you can download them on Google and just have a look at the patterns and see for yourself what you think. There's one or two that I do spot and I like them, but they don't always play out, but they give you a warning. It's sort of like they give you a fair warning in the market as to what might happen next. That's basically it. What would you advise to someone's experience in trading that has always been either death by 1,000 cuts with using a stop loss or account crash by not using a stop loss, lose either way? John, if you were watching a few minutes ago when I explained the whole approach that we use to trading with the risk management, then that's what advice I would give. Just move into risk management and just follow what I said a few minutes ago with regards to risk management. Follow that procedure. It's got nothing to do with these lines or how you trade or anything. It's about how you approach the market. So what I would advise to that person who's either death by 1,000 cuts or using stop loss account crash by not using stop loss, lose either way, my advice is go to the risk management advice that I just gave to Maduri 96 about how to manage your account. That's the only way I trade. It's the only way I want to trade. Look, I'm doing some experiments at the moment with this stuff. Okay, I was just playing around. That's experimental. That's got nothing to do with the way I trade. I'm not going to simply change the way I trade. This is the way I trade. Put a stop loss, $1,000, and then move the stop loss into profit. And that's, I don't do no stop loss. I don't do death by 1,000 cuts. I just don't do it. And I would advise you to change the ways, because it always ends in tears. No stop loss always, always, always ends in tears. What are my thoughts on previous days' highs and lows and mapping out if they are moving with higher highs or lower lows or reverse? Jed, I've got nothing against trading that way. I just don't want to confuse the issue. Don't want to confuse the issue. There's all kinds of technologies and systems in the market which you feel will give you an advantage, right? So if it goes above the higher high, take a trade and off she goes. It goes below the lower low and then you take a trade and off she goes. Or the sweep where it goes up to the top, comes down, sweeps everything out, goes to the bottom, goes below the lower low, take the trade. Yeah, it probably works. It works. I just don't bother with it because it's overcomplicating it. And what I do with things like that, because I know they're there, and this comes with years of experience. I think you just have to trade a lot and see it a lot. And then what happens is you see it, okay? You spot it in your mind. So the market opens, goes above the higher high, and then, yeah, that's probably a long trade. So you spot it and you see it. And if it works out with everything else that you're doing, then yeah, you can take that trade and off you go. Most people who use that, Jed, are people that will maybe trade on 1 or 2 instruments total. So you've got to pick that one instrument that you're going to trade, because let's be perfectly honest, you've got to watch it. You've got to watch it closely to see that happening, or you've got to have a whole lot of alerts in place at least to tell you that that's happening. You've got to be there at exactly the opening of the market. And you've got to pick it up immediately. So, yeah, you can do it, but you're limiting yourself to specific trades. If you're looking at a specific trade in the market, if you say, today I think I want to be trading the Great British Pound US dollar short, okay, you can say, okay, let me look at the lower low and the higher high and see which way I'm going to get my trade. So if this goes below the lower low, then I'm going to take my trade and it's going to go down. You can do that. You can watch that trade and see if it does that. There's nothing wrong with that. But don't over confuse it. Don't overcomplicate it as much as you can. Keep it simple. I mean, you'll notice the title on my thumbnail today is Keep It Simple. Simple trading. Don't put too many things in place, because what it actually does to you as well, while it's there and you see it and it's in the corner of your eye, it also starts to counter your trends, starts to confuse you, starts to make you question your own trades. Should I take it? Shouldn't I take it? For example, the Maduri lost everything in one day and wasn't able to take a trade from there. It's a bit like that. It's because you've not only because you've taken a loss, but now you've got all these counteracting information, and obviously another thing that people do when they lose in trading is you go and look for a whole bunch of new systems, because must be your system that's not working, right? Can only be your system that's not working. So you go and look for a whole bunch of new systems, and that's where you go wrong. It's not the system that's not working. The system works. It's just you that's not working. So then you go and tweak the system, change the system, move on to the next system, works for a couple of trades, and then that fails. And then you go and try again, and you try again, and you try again. At the end of the day, just approach the trades the same way over and over and over again. It can be really boring. You got to approach the trades repetitively the same old way, the same old boring way, with the same old boring risk. And eventually it works. And eventually it works out. Stop trying to look for new systems. Stop trying to change things every 5 minutes. That's just going to make things worse. Promise you. Yeah. So, yeah, Jed, that stuff works, but don't try and overcomplicate it. Maduri, if someone's using 1% risk, but based on the structure you had, move it further, consequently making the risk higher, is it better to stay away until the trade amounts to that 1% presents itself? Okay. If you have, like, for example, a 1% risk here, okay, and it starts losing. Let's say it goes towards your $1,000, but you can see that the trade's invalidated at a $600 loss. Okay, then get out. I did exactly that the other day. I was long on gold. I was short on gold and it went long. Right, my stop loss was at 26.60. It got to 26.40, and I said, I'm done. I'm out of here. I got out with a much lesser loss. Right, there's nothing wrong with that. Either that, or you let it take the $1,000 loss if you feel still confident about the trade, and then you walk away. You do not make the stop loss more. The only time you move the stop loss is when you're going into profit, and you move the stop loss into break even or profit, and you move it up with you. That's when you play around with the stop loss. You do not move the stop loss back. You move the stop loss into profit. Okay, it takes out your $1,000. You walk away and you say, cool bananas, I'm gone, I'm done, I'm finished with this. Next trade, okay? But if you see that it hasn't reached your stop loss, but you would like to get out of the trade because you just feel like this trade's no longer working for you, it's invalid, it's going to go against me, I'm going to lose money, then by all means, get out of the trade early. Rather take small losses. Make your losses as small as you possibly can. Rather than getting out of your wins early, and when you see a profit, let me get out and close this. Most of you guys would close the trade right here. Most of you would be closing this trade because there's a big profit. You'll be like, I'm getting out of here. I'm done. I'm out of here. I'm closing this profit. Most of you would be closing it. Don't close it. But when you go into a loss, you'll hold it. You'll hold it. You'll all hold it in a loss, and you'll hold it forever until it's like in hell somewhere, and then it's too late. So take the losses quickly, hold the wins, switch your mindset around, hold the wins. That's where the big thing is. Hold the wins, guys. You've got to hold the wins. So the 1% risk structure is effectively to protect your capital. If it takes out your 1%, it takes it out, off it goes. Goodbye, next trade. Okay. If you can get out before the 1%, all the better. If it looks like it's an invalid trade, don't get out for the sake of I'm losing, and it still looks like the trade might turn around. Don't do that, because that's just ridiculous. For example, here, the DAX. Okay, this isn't a good example because this is just a thing I was playing around with a small trade, but just for the sake of the fact that it's losing, you get out of the trade. No, this is a good trade, man. It's a short trade. It's probably going to go all the way down. and it's probably going to go into profit. So no, I'm not getting out of the trade. In fact, I would add to the trade here because it looks like it's going in my direction, right? Because it's been in a loss, now it's going into a win. So it's kind of going to be a winning trade. That's what you're looking at here as well. I'm not going to get out of the trade because it's in a small loss. No, it's not invalidated until it gets up here somewhere. But if it got to here, I might get out, 6036. I might get out early because it's invalid. The trade's finished. So look at where your trade is. Common sense prevails. Very important to keep the common sense when it comes to all of these things at the end of the day. Okay, that's been a good session today, man. You guys have asked a lot of really, really, really interesting questions. But guys, I do have to go. I have an appointment with someone, so I have to go and see them. And it's about my eyes again, full of don't worry about it. But anyway, I'm going to go and get that sorted out. So I'm going to be on my way. I'm going to leave you guys now and head on. Have a great trading day. I hope it all goes well. Do come back for the Thursday live show. And I believe it's Thanksgiving in the USA. So those guys who watch the video later on that are probably still asleep now, happy Thanksgiving and all that for tomorrow. And all the best. Hope it goes well for you guys today. Thank you for watching. And